I'm Todd Muslow, CPA of Shreveport. Here's a conversation I have more than any other, and it always starts the same way. Somebody heard something at a dinner. The something is usually this. Wages get hit with employment taxes, distributions don't, so take a small wage and a big distribution and you've saved yourself real money. And the math is right. That's what makes it dangerous. The rule is that if you're a shareholder and you perform services for your S corporation, you have to be paid reasonable compensation for those services. And that part gets taxed as wages. Now, what's reasonable? The law doesn't say. There's no percentage. There's no formula. Anybody who tells you it's 60-40 or 70-30 or whatever number they heard, is repeating something they heard. The actual standard is what you'd have to pay somebody else to do what you do. That's it. And that's a fact question, which means it gets decided on evidence. So think about what that means. If you're the only person in your company who brings in revenue, and you're paying yourself $20,000 and taking $180,000 in distributions, what's the evidence say? It says you'd have to pay somebody more than $20,000 to do your job. That's not a hard call for anybody looking at it. You've answered the question before they asked. And here's what gets people. When it gets recharacterized, it isn't just this year. It's every open year. So the modest savings you booked 3 years running comes back as one assessment, with penalties for not withholding, and interest running from the original due dates. Plus stuff people forget. Your retirement plan contributions are tied to compensation. Small wage, small contribution room. You're not just deferring a tax, you're shrinking other things that ride on that number. So what do you actually do? Write down what you do all day. Get some comparable compensation data for your role, your region, your industry. Put the salary decision in your minutes with the reasoning attached. And do it before the return, not after somebody asks. And revisit it. Every year. A wage that made sense when you were a two-person shop stops making sense as you grow, and the fact that you never looked at it again is itself evidence. The position you want is the one you can explain calmly with a file in front of you. If your answer is, that's what we did last year, that's not a position. That's a habit. I'm Todd Muslow, CPA of Shreveport, and the savings are real. So is the file you need to keep them.